Looking at the Cobra Bond strategy, short only side, going back to mid-2019, you see the strategy results here. This is a strategy that is in our All Strategy Access optional workspace. And it's up 25, 687.50, 194 average trade profit, 39, 68.75. This is the short only side, using the long trades as an exit only. And the trend in bonds has been precipitously down since the beginning of the year. This is 30-year bonds. Huge downtrend. Obviously, just shorting bonds and staying short would make more, but if you like to trade incrementally, short-term strategies to manage risk, this is one way to do it. And we've talked about potential inflation. Look at the daily chart of bonds since the beginning of the year. You see bond prices, 30-year bonds started the year here, sold off, bounced a little bit, and straight down. And why is this significant? The price of bonds is inversely related to interest rates. So as interest rates move higher, as bonds move lower, interest rates move higher, the cost of capital goes up, and it typically affects the ability of someone to borrow and potentially affects the dip buying that you see in the market. So let's look at the stock index futures E-mini S&P 15 minutes, and you see kind of this check mark trade that we keep talking about. So you can see the sell-offs followed by the dip buying. I call this kind of a check mark pattern. You see last Wednesday, market sold off, rallies back, market sells off, rallies back. Thursday was a little bit down. Friday sells off, rallies back, and then rolls over. And then Monday, actually this was actually Monday right here. Monday, Friday sold off, so it gapped down. So what you see happening here is this propping up, and then the truth finally happened. So the propping up at these lows, and then Monday it gaps down, and then a little bit of propping up here because this check mark here, and then Tuesday the market gapping down, going where it was trying to go, but was propped up, and then you get a check mark here, sold off, check mark here. They're trying to do it again. At the open, there was a big gap down, rallied back, and now it's rolled over, trying to check mark again. This Pavlovic response of always going higher. As the cost of capital gets greater, as interest rates go up, we shall see. Technically, in my opinion, the market ought to roll over here into Friday's close. Will it do that? I don't know. Endless amounts of dip buying continue to persist in the market, so we'll see a very choppy, very choppy market environment. Very difficult to trade all these gaps and V reversals in the stock indexes, and I do anticipate at some point that the trends will become more smooth because interest rates are moving higher, and this endless dip buying won't last forever.